Hello and welcome to another update video about oil. The situation is very much unchanged from the previous video. We still have a bullish wave count highlighted here in yellow, which in my opinion has become less likely already, or it became less likely last week when it got rejected in the resistance there. You know, we have this resistance level, the 50% Fibonacci level. Explained to you before that we need to get a sustained break above that level and a move minimally to $79.86, but better $81.20 to keep the yellow count alive. Now that hasn't happened. That hasn't invalidated the yellow count, but it certainly made it much less likely. The only way I can really keep the yellow wave count alive as basically bullish structure in which from here, a wave one basically, wave one completed in September, a wave two completed in December, and we're now basically in a bullish third wave to the upside. Well, see, the only way I can really keep that alive would be by looking at this here as a leading diagonal, but the third wave didn't reach ideal targets. The fourth is very deep. And yeah, we could still get one more high. If it now forms one more high from here, well, then I could call that potentially a wave one. Okay, so that would be the signal, if it forms one more high, that I can give you a support area for wave two. And that could be a long trade setup. At the moment, I don't have any clear setup available here unless you trade pullbacks to trend lines. I mean, to be fair, we have a pullback to a trend line. That's not one of the setups I normally use, and but it's possible. It's just for me to see this as a likely structure. No, it's at best a diagonal, but all I see at the moment is a three-wave move up, nothing impulsive. But yeah, I mean, to be fair, a wave four in a leading diagonal might retrace all the way down to the low of the wave two. And that's at $69.40. Now that's way too deep for a reliable one. And normally I don't want a wave 4 to go below the golden ratio level. And it did though, yeah. Okay, it's recovered since then, but still. Yeah, I'm not entirely happy with that count. There are other, it's always when you get overlapping price action, you have different options. I could even say, okay, maybe wave 1 needs a little bit more. The wave 3, for example, might not even be finished. And this was only the A wave of a third wave. In a leading diagonal, we get corrective structures in the subwaves, and maybe this was the A wave, the B wave pullback, and the C wave up still to come. And then we get the third wave. Maybe then we reach that area around $81. Then we get a 4, then a 5, and so on. All I want to highlight is probably with one more high. If we get one more high, I might give it the benefit of the doubt. Highlight, depending on what it does. Highlight, yep, we might have 5 waves. I'll give you a support area, might still exercise caution, but in case this is a wave 2 pullback, then the third wave could obviously be quite aggressive. The proportions don't really work here, but we will adjust them when we'll get more evidence about that. So takeaway is one more high above the January high gives us 5 waves. And that could trigger a corrective pullback in a wave 2. And that is a setup, a 1-2 setup to trade a third wave. At the moment, all we have is a pullback to a trend line. And I think it is a reasonable trade to set a stop below the last low. Look if we get it, because we have a pullback to a trend line. It's a very well-defined one. Yeah, but it's a pullback trade. But it's not any setup I would normally put onto the chart. So I just highlight, if you're a pullback trader, we have a trend line there, very well defined. That doesn't mean I believe in this count. I don't believe in the yellow count until I see 5 waves up and then see that it holds the 3 waves, the 3-wave corrective pullback in the wave 2. Okay, what happens if we break below that wave 2 low at $69 and $69.30 pretty much? That would be our signal that most likely here the 5th wave to the downside is unfolding. That would be wave 5 of C, and then with one more low we could complete this entire correction. I have to say though, this, as I said, this wave 4 was a little stronger than it would be ideal. So there are other patterns that could play out here that are actually much more bearish. All right. So it's difficult to say, but it could be that this here was actually that all of this here is a wave 1, that this here was a wave 2, and we get a much more bearish, you know, move into the summer, wave 3, 4, 5, into maybe the low $50 region. That's nothing I'm currently focusing on primarily. But the thing is, we have a downtrend that started in September. We have a corrective rally that's clearly only 3 waves so far. And I always tend to focus on the present. So what do I see? I see a corrective rally at the moment into resistance, and it got rejected. And as long as I don't see 5 waves, I focus on lower. And if that means this is a 5th wave down, or maybe even something more bearish, is at the moment really secondary. So as long as I only see corrective rallies, I focus on lower, okay? It takes a first impulse to the upside, or at least a diagonal, followed by a 3-wave corrective pullback to confirm that we are flipping back to the upside, okay? So hopefully that's sort of clear. Just to make it very clear, what am I watching for? A break above the January high, $79.30, will give us likely 5 waves. Then I will add a support area to the chart for the wave 2 pullback. That would be potentially bullish. If we get a break below the wave 2 low there at 69.30, that would confirm the white count, which I'm leaning to because we're in a downtrend. As I said in the last week's video, I'm leaning towards the white count until I see 5 waves up. Okay, that would be my signal that something's changing. 5 waves above resistance. We haven't seen that at this stage. And then, yeah, I mean, the parameters are unchanged. If we get another low, I'm going to watch this area around $60.80 to $64.33. And yeah, we can also take a look at Brent Crude, which, however, is the same structure. Basically, the same commentary applies here. Also here, it's not so well defined, that trend line. We actually broke below the trend line, and it seems like we're retesting it from below. That is even a little bit more bearish maybe. But the same thing, you know, if we get one more high, we have potentially 5 waves. Until then, I'm watching for further downside primarily. It depends on the structure of the next rally. If it's corrective and stays below the last high, we're looking for further downside. If it pushes above the last high, that means we have potential 5-wave move, and any pullbacks from then on could be opportunities in an uptrend. That's all I can say right now. We haven't really had much more movement since last week's update. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.